Hello, I want to quickly go over this financial spreadsheet that I've provided to you. It's a great way to take your P&L and your balance sheet, put it into a spreadsheet that's going to calculate the simple numbers that we've talked about. Not only your pre-tax profit, but your gross margin percentages, your productivity numbers, your full-time equivalents, your contribution margin, your revenue per full-time equivalent, and then it's got balance sheet information down here where you can take off your balance sheet. You can put these numbers in for the end of the quarter. Total dollars, accounts receivable, payable, inventory, cash on hand, so it's looking at cash and the ending balance sheet, and current liabilities. And what that will do is then calculate everything in the yellow here to give you your AR outstanding, your accounts payable outstanding, your quick ratio, current ratio, and inventory turns. Also down here, if you do have a mix of products and services and you can break those out, it'll give you the ability to start looking at the gross margin per product line or service. That way you can look at those gross margin dollars per product line. So it gives you that ability down here. So basically, you go in, put in the last 12 months at the end of the quarter. So let's say this is quarter 2 for 2016. So I go back 12 months from that date and I put in that number. Then I go back a year before this and put in the number just to see how much our revenue changed in this last year. It'll calculate that. Then put in only in the green boxes your cost of goods sold dollars, your gross margin dollars, and it's going to calculate your percentage of gross margin, a key number in your profitability. Put in your pre-tax profit numbers here, dollars, and it will give you a percentage, and then put in last year's pre-tax percentage and it'll tell you the change. Total cost of labor, put that in there, and down at the bottom it tells you what should be included: salary, commissions, workman comp, payroll taxes, life insurance. All the cost of labor go into that line. No cost of labor should be going into your cost of goods sold at the top. So on your P&L, if you have some labor in your cost of goods sold, take it out, readjust, and then move it down into this total cost of labor number. Full-time equivalents. The best way to do this is hourly people count up their hours, and then there's 2,080 hours, 40 hour, 52 weeks a year is a full-time equivalent. That's a great way to do it. If you don't have that capability, then just adding up people, the bodies. If somebody works part-time, they're 0.5. If somebody works full-time, they're 1. But those are your full-time equivalents. And then this will calculate revenue per full-time equivalent, the contribution margin dollars that we've talked about in the past, the contribution margin per FTE, per full-time equivalent, as well as your labor efficiency ratio. For every dollar I spend on labor, what kind of return am I getting in gross margin? A key number in profitability. Accounts, as we said, receivables days, quick ratio, current ratio, inventory turns are all calculated by putting in the ending numbers off your balance sheet for your accounts receivable, your payable, your inventory, and then cash on hand for the quarter and your current liabilities. So that's the sheet. Once you fill in these green squares, it's going to calculate these key numbers, these KPIs, key performance indicators that you'll be looking at and using for some of your goals that you're about to set for your strategic planning process. Thanks for listening.